You are listening to ChartingWealth.com for Wednesday, the 9th of September, 2015. Look at this market. What is it doing? Well, since we had the big drop back on August the 24th on that two-day candle, those of you who are listening by audio, I will explain. We had movement going back and forth, up and down in the market over the last year, but it all paled in comparison to that big drop. Then what's happened afterwards? Well, our MACD actually gave us a signal before the big drop occurred, several days before, around the 18th on our two-day chart. One reason we follow it. It's a nice predictor in many times. And we've seen the derivative oscillator starting to lose some downward momentum lately. We see a coming together, a converging of the two-day MACD and the moving average line that it must cross in order to actually signal an up move. But what we've seen happen, if you look at the candles, is really just a sliding sideways. That's really what's been happening over the last many days. And in fact, the high that was reached on the two-day candle back on Friday the 28th of August is still right around where things are on the large chart. And again, we're looking at IYY, which is the total market. It's a total market exchange traded fund. We like to follow it. And we can see that we've had no crossing over. We're still well below the 50-period moving average line, which for this chart would be the 100-day line. And we don't have any signal except a down signal at this point. But it does look like we're having some converging on the MACD. Now, if we drop back to our 4-hour chart, what do we see? Same thing, a lot of sliding sideways. Did cross over going up back on the 27th, but it has not really, that is of August, but it's not really done much of anything since then. Derivative oscillators heating up in an upward move. MACD is diverging more, but again, no huge move-ups. In fact, our Bollinger Bands are actually getting closer, showing a lack of volatility. Now, we do have a difference in our two-day and our half-day. Two-day is still down. Half-day is moving up. If we see a crossover going up on the two-day, and then we see a bit of a pullback on the 4-hour chart, and then it moves up again, then yes, we might look for some upward movement. Short of that, no, we're still in a confirmed down move, and there's no safe thing to do at this point with the big chart going down. Now, if we do see a rollover, then of course we'd want to get in on a down move if the short chart moved over. So that's where we are. We're going to now take a look at SPY. What is that? Well, that's a Standard & Poor's 500. Again, confirmed down moves on that. We've not even gotten to where the down move started on the 26th. We're even well below where there was a bit of an up move on the two-day candle on the 28th. We're still below that. We're in a confirmed down move on the SPY. There is a bit of a converging on the MACD, still negative on the derivative oscillator too. What do we see when we look at the 4-hour chart? We do see an attempt to make some recovery, been moving up, crossover on the short chart since then, but nothing confirmed. Now, if we do see this MACD cross back over going down and our two-day chart's still down, that's going to be a signal for us to either be out of the SPY, which hopefully you already are, that is the Standard & Poor's 500, or look for purchasing in your virtual trades an inverse on the Standard & Poor's 500, an inverse fund, and see how that works for you. But we're not there yet, so we'll continue to monitor. Now let's go back to our two-day chart. We'll look at the last of the indexes, then go to gold. The last of the indexes is the Qs. And again, the Qs was up technically 2.82% for the day. The S&P 500 was up 2.51%, but still far below where the drop originally occurred on the 24th. Same kind of setup. We have a converging, don't have a crossover on the MACD, so we're still negative on the big chart, which is what we go by. Although we do see quite a bit more catching up to that up move on the 28th, which is the highest it has been since the big down move on the candle of the 24th of August. Now let's drop back to the 4-hour chart and see what we see. And again, we've got that crossover around the 27th of August and continued up moves. Derivative oscillator is positive but weak. And we do have the MACD in an up move. Now again, we have a confirmed down move on the 2-day chart. Till we have that crossover going up, we'll be in a confirmed down move. If we see the Qs cross over, and again, the Qs is the NASDAQ 100. If it crosses over going down and parallels what's happening in the large chart, look for buying into a virtual trade on something like QID, which is an inverse of the Qs. Or just make sure you're out of the Qs. If you don't want to play with an index like that in your virtual fund, then just stay out of the Qs until you have a confirmed up move. Now, let's go finally to, we're going to range back out to our 2-day, and we're going to go to gold, which was up just a little bit today, not much. Looks like gold has been sliding sideways for the last many days. It actually had its last big up move back on the 24th of August, broke through the 2-day trend line, hasn't crossed over going down. Gold is just sliding sideways at this point. But if you'll remember, if you've been tracking gold much lately, what did we learn about what gold has been really giving us some good signals on? Is the 4-hour chart, exclusive of anything going on the 2-day chart. Saw a nice clean up move on the 27th of July, slid sideways for a while, but then paralleled that, started moving up nicely. About the time gold started losing that energy, crossed over going down, and has continued to move down or sideways since then. And that's sort of what's been working well for gold. And what do? We want to make money and win. So if you're in an inverse gold, great. Not be a time yet to actually purchase gold. It does look like it might be bottoming out. But again, the MACD doesn't tell us that. The price is showing that. We'll continue to watch the MACD. Derivative oscillators in the negative, as is the MACD. Gold is in a down move on the 4-hour chart, so pay attention to that. How can you use the 2-day chart to help you? Well, if the 2-day chart actually crosses over and going down, and the 4-hour chart rolls up a little bit and then moves over and goes down, you might look for that. But again, we've seen the 4-hour chart has continued to be a very good chart for gold, period. So hopefully these things have helped you as we've gotten into a new trading week after the holiday. Wish you the best in trading. We always love to hear from you. Follow us on Facebook and Twitter and also Instagram. Let us know what you think and how we can help. God bless. Wish you the best in your investing from chartingwealth.com.